By now, most of us are familiar with the lockdown, as most African countries have used the lockdown as the immediate defense against the coronavirus. But COVID-19 is not the first pandemic to force countries into implementing lockdowns. The first lockdown is believed to date back to the 17th century, used by the Italians to fight against the plague. One can see similarities between lockdowns as we experience them today and the very first version, which set the template for health emergency responses about 400 years ago. Some of those similarities include contact tracing and a heightened police presence to ensure people follow the lockdown rules. The ultimate goal of a lockdown has remained the same throughout the years: to limit the spread of a virus. Often, people speak about flattening the curve, which refers to the goal of slowing down the spread of a virus within a population. Lockdowns help countries achieve that by limiting movement and buying governments time to prepare health systems and other infrastructure to tackle a virus. On the 21st of March, 2020, Rwanda became the first country in Africa to implement a lockdown because of the COVID-19 pandemic. Only essential movement was allowed, meaning that people could only leave their homes for medical care, food, and banking services. Rwanda also closed their borders, with the exception of cargo goods being imported, and for the return of its citizens. Implementing a lockdown is good for a country's health and safety, but it poses challenges in other avenues. It calls for a difficult balance between a stable economy and preventing deaths. What makes it even more challenging for African countries is how most Africans rely on daily income, and they need the ability to conduct business activities day by day. But during a lockdown, only essential service providers have been allowed to operate, leaving many with no income or means to provide for themselves.
And if you look at Lagos and also spreading across the country, is like about over 80% of Nigerians work mainly within the informal sector. And by these, I mean these are people who earn by the day and who live by what they earn, and who are usually low-income earners, and most oftentimes don't have savings.
But some governments, like South Africa, established funds to support citizens as they stay home, unable to work. During the early days of the South African lockdown, President Cyril Ramaphosa announced a $30 billion social relief fund, the largest relief effort in South Africa's history. The fund supports many sectors of the South African economy. However, part of it is being used for a grant program of about $20 a month to be awarded to citizens. This grant only supports unemployed people above 18 years old and that are not recipients of any other form of government financial support. Successful applicants will receive this grant until October. However, around 50% of applicants have already been rejected, and a review of the rejected applicants found that 85% of them actually met the criteria. Finally, many of those who were approved did not get the full amounts that they were promised.
It wasn't implemented particularly well. So the idea was that it would be distributed through the Unemployment Insurance Fund and through the South African Social Security Agency, which generally distributes social welfare packages like old age pensions, child welfare grants. And that was a decent idea. SASSA has a lot of reach to possibly the most vulnerable people in our country in terms of poverty, and the UIF would have been ideally handled by employers who would apply on behalf of their employees. Now, the problem then became that SASSA rejected large amounts of people who applied for that 350 Rand grant, which was that particular number was asked for because it was estimated by a number of studies that would prevent a drastic increase of extreme poverty due to the lockdown. And in fact, would leave people better off than they had been prior to lockdown and the pandemic. But SASSA, being a bureaucratic organization and one that is quite heavily burdened, started to very intensely review people who are applying in an attempt to, I guess, root out people who are trying to fraud the system. A number of weeks passed with only 1 or 2 payments being made, purely because SASSA claimed that it was trying to do its due diligence, trying to ensure that funds were not misspent or didn't go to anyone who didn't deserve them.
Besides supporting citizens, 40% of the 30 billion relief package has been dedicated to providing businesses in South Africa with loans. This is a great initiative as it allows many businesses to retain employees and continue delivering their services. However, there are doubts about how much and how quickly these funds are being loaned to businesses as they continue to face a huge risk of shutting down during the pandemic.
At the end of April, they announced a 500 billion stimulus plan. That's equivalent to 10% of GDP, or roughly 1 month's worth of economic activity in South Africa. The biggest part of that was a 200 billion bank loan guarantee fund. The idea behind that is that individuals or small companies, initially up to a maximum of 300 million annual turnover, could approach their banks, and the banks would give them money in order to pay salaries and suppliers, so that there wouldn't be a fall down in economic activity. The problem with that, however, is that the banks so far have only allocated just over 13 billion. So that's less than 7% of that 200 billion in the last 3 months. So it's around about 2.5% per month.
Nigeria is another country with programming aiming to support its most vulnerable citizens financially. The country has an extremely high level of poverty, with approximately 90 million people living on less than $2 a day. Since long before the pandemic, the Nigerian government has been supporting 11 million of the poorest Nigerians through a program called Conditional Cash Transfer. The scheme was adopted as the federal government's main welfare program during COVID-19, adding only 1 million additional people to the program. Today, about 12 million people belong to households that are receiving $13 a month over 4 months through this program. Given the sum and amount of people supported by this program, Nigeria is still far from helping the 90 million Nigerians living under extreme poverty to survive the pandemic. And when compared to South Africa, the sum received by each person in Nigeria is significantly smaller. However, there is very little information on the implementation of both these programs in their respective countries. The only transparency around these programs is in the doubt of their effectiveness, especially in Nigeria.
In a 2019 World Bank report on the Nigerian social protection system, there were questions about whether or not it was actually effective, whether or not it was reaching the right number of people. And for that project to be used as the basis on which the authorities sought to provide support during the COVID pandemic meant that, it would essentially exclude many millions of people who needed the support the most.
South Africa's Citizen Grant also lurks in doubt, as a similar initiative supporting farmers in South Africa was unveiled to be distributing stipends much lower than what was officially recorded. Despite government efforts trying to support citizens financially, many other social issues have been arising because of how ineffective these efforts are, or simply because governments cannot help everyone. In South Africa, many are being threatened by landlords to leave their homes despite a court order that made it illegal for anybody to be evicted during the first months of lockdown. The South African government also stepped in to subsidize utilities for many households and suggested that landlords go easy on their tenants. Yet, people still find themselves being bullied by landlords who are illegally cutting off their utilities, leaving people with no option but to consider relocating.
The unfortunate truth is that the average South African does not have an intense understanding of property law or housing law, and also just cannot access legal services because they are incredibly expensive. And so what we've seen is that landlords have still evicted people, even during level 5, without obtaining a court order, or they have done things to attempt to pressure their tenants into leaving when they could not pay rent, like illegally cutting off electricity and water for their tenants. And that's been a massive problem because those are people who don't have any legal recourse to challenge those evictions, and who are now left without housing.
In Kenya, however, an interesting case of people losing their homes occurred when over 8,000 people were evicted from their homes in the Kairayobangi settlement outside of the capital, Nairobi. They were violently evicted in the early morning despite a court ruling against the evictions just a day before. The Kenyan police raided the township, deploying tear gas throughout the area and forcing people to leave while destroying their property. Another 1,500 people in Ruai and other indigenous areas were evicted in a similar manner. Thousands of these individuals are still left homeless with nowhere to go. It is hard to imagine how these people can practice the widespread hygiene tips we have gotten used to hearing during the pandemic. This is very much the case in a country like Nigeria. In the state of Lagos, over 60% of the residents receive water through private firms and means. This is even more the case in rural areas around the country, where it becomes harder and more expensive to receive clean, running water. And without running water, people are unable to use one of our best defenses against COVID-19, washing your hands. Nigerians are largely facing a difficult choice between washing their hands to be safe from COVID-19 or drinking this scarce water to stay hydrated. Not only are the people of Lagos facing challenges with water, they may also be starving. The state government of Lagos claims to have delivered food parcels to Nigerians in need. However, to date, only 200,000 food packages have been distributed in the first week of lockdown. At the time of their distribution, the government announced that it also aimed to provide an additional 2 million packs. Both of those figures do not merely amount to anything when sized up to the 20 million people living in the city, or even when compared to the estimated 8.6 million Lagosians who already struggle to get enough food under normal circumstances, according to Reuters. Financial welfare programs in South Africa and Nigeria face a lot of criticism because of corruption and lack of transparency around these programs, which is concerning because the programs and infrastructure being used to disseminate money already existed before the pandemic. The corruption, lack of transparency, and accountability were already built into these programs. At the wake of 2020, none of us thought in 3 months the world would come to an emergency halt because of a virus. And as social issues continue to exist and worsen because of how COVID-19 has changed our lives, governments must continue to work towards ensuring that citizens are protected and given the necessary support to endure these difficult times. In our next and final episode, we will analyze how COVID-19 has affected law enforcement as well as the state of crime across Africa.